we call Business Standard Banking Technology Roundtable. We started it last year, and the reason is obvious why technology deserves a separate session altogether. I would first like to invite the panelists here. To start with, Madhivanan Balakrishnan, Chief Technology and Digital Officer of ICICI Bank. Ms. Shinjini Kumar, CEO Paytm Payments Bank. Mr. Ramesh Venkatachalam, MD India and South Asia, FIS. Mr. Rajesh Mirjankar, MD and CEO Infrasoft, and Mr. Nitin Chugh, Country Head Digital Banking, HDFC Bank. Thank you. Well, as you know, in the first session, technology cornered a lion's share of the discussion. So we have to pick up some of the threads from there and maybe discuss in details. Now, just to put things in perspective, there's this NASSCOM, the Future of Internet report, which came up with some interesting numbers. I'll just read up 3 or 4 of them. It's saying by 2020, the expected growth of fintech market is expected to grow by 1.7 times. 75 to 80% of net user growth will come from rural India. 60% of adults will use one or more form of financial services. The number of online shoppers will go up 3.5 times by 2020. Half of all transactions will happen online, and 75% of e-com transactions will happen through mobile phones. Now, this is one set of numbers showing all of us the sheer potential of this sector. Yet, to begin with, the retail payments in India are still dominated by cash. I'm told only 6 to 7% of transactions here are conducted electronically, and the rest are in cash or checks. Even though there is a misconceived notion that cash is free, which it is not. So, I would like to ask the panelists first, the numbers that this NASSCOM report quotes, how much of it is leap of faith? How much of it is in reality? What are the issues that they face in going up to this kind of numbers? To begin with, Mr. Venkatachalam.
Yeah, thanks, Shamal. Speaking specifically about the 3 or 4 data points, I think I'll pick on a couple of themes. One is it came up in a couple of data points. One is how much of these transactions are originating, whether it is shopping or usage of banking services in the rural economy. I think that by far is probably the biggest revelation that we have. I think that is going to take off in a big way. But across the board, we look at e-commerce, you look at ATM transactions where we play a big role. We see a big leap in transactions happening in the rural area. There's a bit of a contradiction there because we also see massive urbanization. We see tier 2, tier 3 towns, which we call them tier 2, tier 3, but they would be large cities by global standards. A lot of transactions happening in these areas. But for sure, the rural market is going to take off, whether it's e-commerce or transaction. The only point about whether the cash economy will change significantly, I think the jury is out there. Acceptance is still a challenge, and therefore cash makes it easiest. It's stuff that you can traditionally you say you put it under your pillow and sleep, right? So to that extent, I think we'll have to figure out whether UPI and some of these newer mechanisms are going to take off, because I think clearly mobile and mobile first is going to drive how consumers are going to behave, and rural will be a big driver of that.
Okay, sure. Would you like to add?
Yeah, I agree with Ramas. I think from a perspective of the statistics that you put across for the acceptance of cash, obviously they are bound to be higher anyways, considering that cash has been there for centuries and digital has just come in. So I think the past decade of so-called digitization that's come in, and then of recent couple of years that have gone into bringing actual business products that are driven by digital, this will definitely see a demand. We've been in the area of providing cloud-based solutions for payments. And we've seen a surge in the number of transactions that have happened from the time of launch to, let's say, a year later. Are they comparable, or is it comparable to the cash transactions? Probably not today. But if you look at the growth in the digital, and I think when the bankers would take up the questions, you will realize that the percentage of transactions is definitely increasing towards digital anyways.
So, I think we need to understand what's so fundamental about why this is the time when we think this shift will happen. And what's so fundamental about it is that digital transaction makes it possible to do really small value transactions. So all of a sudden, this whole mind shift from saying that if you want to do 2 lakh and above, then go for RTGS. If you want to do certain amount, then you do NEFT. If you want to do below that, it's cash. Now all of a sudden, all the attention, all the technology development, all the interface requirement is focused to seeing that part of it, replacing that, which I don't think has ever happened in that order. So which is why this is fundamental. Also, if you see the nature of the economy, the mobile of course is the major contributor. So between the mobile, the ease of making that transaction because digital technology makes it possible, and a whole lot of policy push around bringing a larger number of people and transactions into formal economy. All three of them will be very important drivers to make this happen. And so to answer your question whether I think it will happen, the answer is unequivocally yes, it will.
Okay. I completely tend to agree with the panel till now. I don't think these numbers are a leap of faith. They are genuinely an indication of the things to come. As far as the rural segment or which you are planning about how they will ride into this bandwagon, if you have to look at our existing portfolio of any bank, a big chunk is already happening in very automated mechanisms. So for us, for example, almost 80% of it is non-cash related within the branch. But then you're talking about a very select set of customers whom you have picked and choose. Let me call it as the organized sector, retail customers are much more evolved. The long tail, which is a rural story, needs to be catered. And there, to Sanjani's point, the cost of doing transactions, if it comes down, and that invisible cost of cash, if that sort of gets brought up, then there is a big story to happen. Now, what is preventing that? There are these, I wouldn't say the industry has evolved in such a way, there are concepts like MSF, there are interchange, which are limiting our ability to do certain things in the physical world. A mobile becoming a center of attention suddenly changes this paradigm. Our ability to do transactions as low as $50 on a mobile base is a big one. What would be the hindrances which we believe which could result in this thing not happening is some of the other things need to play in together. In the earlier session also we spoke about what is the role of the consumer. Consumer awareness, ease of doing it, dramatically reduction of friction, regulation, cybersecurity fears. This event should not put us back, it should actually take us forward. So I think these are things which we as an industry need to take care of, and this is going to be a very soon big reality.
Right. We'll come to that part of it. Do you have some opening?
So while it's going to be 75% on mobile for e-commerce or 80, it really doesn't matter. The point is that it is certainly going to grow many times from what it is right now. But in addition to what everybody else said, I think one of the prerequisites is also going to be the availability of the public infrastructure. So what kind of bandwidth is going to be available? What kind of connectivity is going to be available? What kind of penetration of smartphones, while it's expected to grow at 30% CAGR, but if it doesn't, and we continue to get the stripped down, the cheap smartphones which keep running out of memory space, then some of these challenges will continue, and more time and effort will go towards educating the consumer. On the other side, the property that the consumer might possess in the form of a mobile device may or may not actually be available to help him do all those transactions. The second thing is also the acceptance network, which one of the panelists spoke about. So all of this will also work not just on a P2P basis, because these payments on a P2P basis will be as convenient as handing over cash, right? So it's not going to replace the convenience of cash, but yes, it's going to bring in an element of the network effect, for which when you take it to the extent of the merchant infrastructure and the merchant acceptance network, that is really going to determine how successful this is going to be. So both these points, the public infrastructure and the merchant acceptance network, are going to be very critical to all these numbers, playing out.
Right. So what the point that Madhivanan mentioned about the security part of it. which is now gained much more prominence because of the recent debit card breach, where some banks were found to be, it basically raises questions about the preparedness of the financial ecosystem to such cyber security and related issues. So, and customer confidence obviously takes a knock. So, what would be your perspective on this? Do you think that there is this sense about many banks, I'm not specifically mentioning about any of the panelists here, but many banks in our system still do not have the requisite infrastructure or ecosystem that is required to prevent such kind of, for example, it has also been talked about the response time to this latest event could have been far better. Do you agree with this?
No, I don't tend to agree on the response time bit, but let me handle the first part of the question. I think as an industry, the banking industry, as it shifts away from a branch-based environment to a technology-driven, mobility-driven environment, I mean much more specific, is a reality, and people have sort of guessed it. And one positive thing is the ecosystem, whether it be the bureau, whether it be various other tech providers, are now bringing in capability which have the ability to block, ability to trace, and even ability to respond. Do all the players in the system, have they come up to speed, is an individual issue, and like Mr. Aditya said in the earlier session, the dependence in an interoperable system, the weakest link would always be an entry. But even that, even in this kind of an incident, like we spoke, 3.2 to 3.4 million customers are technically exposed. But the very fact that only 2,000 odd customers actually did it, got impacted because of it, talks about actually the ability to respond, the systems which are already in place. Does a technical system exist? It does. Is it being implemented by most of the banks? In my understanding, when we have been speaking to the industry as a whole, it seems to be that most of them are there. Do we need to have a better interoperable way of making this much more fruitful? I think that there is always scope to be one step ahead of the fraudsters and scamsters. So.
Right. No, I mean the the amount of money involved, etc., wasn't good. We all know the figures are paltry. But the fundamental issue is that at the time you are making the transition, customer confidence do take a knock, and all kinds of questions are asked. How do you see it, Viju?
No, customer confidence is, every time something like this happens, and it is reported in the news, whether it's a bank or another bank, there is obviously an issue on the customer confidence, and that's the reassurance that the banks have to provide by not just displaying that they have a mechanism of protecting their customers, but also the response to that. So yes, the response time to a particular incident that happens at a network level, which might impact multiple banks like in this last case, could be different. Some banks might respond faster, some banks might respond differently, some banks might have a lukewarm response. But the customer's perception of the mitigation of the incident that has happened, which is triggering some kind of a doubt or a fear perception, that mitigation can only happen with the degree of the response as well as the time to response. So I don't think that it's out of place to say that it's as critical for all the banks to respond in a very affirmative way. The language can be different, but the tone and the tenor needs to be exactly the same, saying that yeah, all of us are reassuring you. Yeah, I can reassure my customers. I can tell my customers that my network is safe, like most of the messages in the media was all the banks saying that my network is safe, my ATMs are safe, right? But I think the banks also need to go out and say that the entire network is safe, we've all come together, we made sure that, we put the problem behind us, you don't have to worry. That degree of response would be probably a little more reassuring than what it has been in this case.
Mm-hmm. Okay.
And what's worrying actually is that it's very hard to give that response, because the way the transaction gets, so one of the things that happens is multiple people own multiple different parts of the ecosystem, and one of the things that worried me is when an incident happens, then if each party says my system is not at fault, then it requires a very different level of intervention to effectively find that response. And I was just thinking, if somebody is insured this transaction and needs to actually bear that loss, then there has to be the definite knowledge that where was the fault.
It's like a car manufacturer saying that, my car is safe, but another manufacturer car comes and hits you, I can't do anything.
Right.
Or the person who made
Or
the
the problem
part.
of the road.
Yeah.
No, you can't say that. Yeah. So I think we have to play it out to the fact that the customer will perceive risk as a network. And we've seen these examples in the past. Whenever there's been a problem in a bank, there are other banks also who face a similar kind of questions from their customers.
Let's hear it from the financial technology players themselves.
Yeah, sure. The recent incident happened on the payment system related to debit cards, but I'm sure, our memory is such that if you go back to about 12, 15 months back, and, that's probably the point Nitin is making, that we've had, a whole host of reports in the press about phishing attacks where, consumers were unaware of, not revealing information that allowed access to, say, internet banking systems and so on. So I don't believe that, the problem will go away as happened in the, the panel before. The reality is that these will happen. The question is the preparedness. If you look at us from a technology provider's perspective, look at the challenge that we face. This is not a national phenomenon. We are seeing it more in India because digitization is increasing the possibility of such frauds being perpetrated. But as a global provider, we see this happening globally. And the most significant change that has happened, and that's something that all of us need to be aware of, is that this is not Hollywood style, a couple of script kiddies sitting in a dark room under a table lamp and trying to hack into banks. These are very coordinated, cross-border, well-funded. We actually start calling them advanced persistent threats, right? To say that this is very organized, that's happening. Geopolitics also has a big part to play, although I don't want to get into that, but there is definitely a factor that a lot of these systems constitute national infrastructure. So as a technology provider, I think one of the areas that, I would like to bring out here is that we need to collaborate a lot better. If you look at, a lot of payment systems today, card schemes, for instance, they operate globally. The same thing will happen. We have credit rating mechanisms where you have credit rating agencies. They all share information. Today, there is not yet, I think, evolved a mechanism where banks, technology providers like ourselves, and affected consumers can have a play or a role to play in bringing information far more quickly. I think the reality is these will happen. The question is how quickly do we detect them? How quickly do we share information? Because banks are worried about one aspect, reputation. And therefore, unless we are sure that our stables are, secured, there is a reluctance to provide that information. I think this mechanism, this is a good wake-up call to see if such a mechanism can evolve. Maybe the regulator can play a great role in facilitating this, and say elevate information security concerns to be, infrastructure concerns, affects all banks and not a bank in isolation. I think that is one plea that I would certainly have, which would allow everybody to, operate in a mechanism where we can address these issues of quicker detection, quicker recovery, and greater collaboration among the various stakeholders, the consumers, technology providers, and banks.
About the regulatory part, RBI does have a cyber security policy.
Yes.
But the impression is that the banks are very slow in implementing some of
Yeah,
this.
it's a policy, but I'm saying, is there a framework where one can say that this is how you respond? You have mechanisms like CERT, which tell you what's emergency response. But in the digital era, we have not paid probably as much attention, right? I mean, I will say something very controversial here, but the reality is, in the pursuit of jugaad and in the pursuit of, the lowest cost per transaction, the fact is that there are compromises being made, right? Reverse auction, it kills some of these mechanisms because there's a cost to serve, there is a cost to provide a certain level of transaction. You cannot compromise on these things. I think we need to figure out whether the regulator also looks at some of these elements and say, guys, there needs to be, a basic standard. You cannot go below this. And if there's a cost to serve that, so be it, right? I'm referring to the execution of the policy, less so much as the policy itself. I think the regulators, India is very safe. Trust me, we operate globally. We are better than many countries in the world. Panelists talked about chip and pin. It's not just that. Even the overall security framework is better than anything else you'll see elsewhere. It's reflected in some of the surveys we have done. But having said that, can we take it out of just policy and into execution on a fast track basis? I certainly think that, as an organization, as industry, we should be hooting for that.
Yeah, that's an important point.
And I think also extending the point that Rama said, it is important that there is a discipline around vetting the vendors who take up the contracts for implementing digital strategies for banks. But one thing I should say, that given the experience that we've had across various sectors of banks, whether it's PSU and cooperative banks or private banks, I think banks do take security quite seriously. Importantly, the regulator has put in the right policies, and also if you look at the way the payment aggregator looks at it, NPCI, the standards for putting in a digital solution are there. You have to clear those audits and then you get access to it. It's also important to sort of segregate the issues around the whole debit card, things that come up. Not everything is a cyber fraud. There's also the aspect of ignorance of clients, that you get a phone call and you tend to divulge your password. It can only improve with education. I think the more the media talks about it, the more the banks educate their customers, and the more the customers sort of appreciate the fact that digital is an opportunity, but at the same time a threat. It's obviously going to sort itself out. I would say that the chances of me getting hit, my car getting hit around on the road is far more than me having a credit card fraud, but I have not stopped driving. So it is necessary to sort of adopt digital anyways because of the convenience that it brings forth. And from a cyber security point of view, I think important aspects that need to be governed is the adoption of not just better firewalls and things such as that, but improvement of internal processes in terms of fraud management systems, being able to detect it, and how the digital era with the data that you have at hand is able to utilize or you harness that data to sort of respond to it very quickly.
Mm-hmm. Yeah. Would you like to add something to this?
Well, I think the only thing is there is really no jugaad in financial services, like the way you said, because finally you're playing with customers' money. So there is, I think most banks, and I can certainly speak for ourselves, is that whenever it comes to taking a call between convenience and security, we would lean towards security, even if it means that make it a little inconvenient for the customer. Because I don't think we still have that level of digital maturity on the consumer side. You have to build it over a period of time. So these quick fixes, if at all they happen, I wouldn't be aware if they've happened in the banks, at least certainly not, speaking for ourselves, certainly not, because we've been very conscious of the fact that while it takes a long time to educate the customer and bring about a habit of secure banking, right, or a secure way of using digital, it's as much important to make sure that you don't expose anything to even interpretation that, if I did this, I am not even sure which way it's going. And that is the most common problem. That customers, when they use something, at that point in time, if they are not certain, where is it, how is it going through, how is it helping them, they certainly know, but how secure is it if they are not very clear, they are unlikely to even do that little transaction. If the bank is reassuring them and also makes an effort to explain to them that, yes, we have done this, but it's in your interest. Like we get a lot of calls saying that, why do you ask me to do this? Why can't I do it this way? What kind of a digital age are you living in when one side you're saying digital, but on the other side you're asking me to do this also. But when you explain to them that it's in their interest, they understand. So, but I think it's important to keep that balance in place as much as it's important to have the right infrastructure to prevent and detect and as well as respond.
Right.
Yeah, very quickly, when I said the jugaad mindset of saying that, there's a very, the big chasm between the standards that, some of you guys set in the industry and the wider industry, to the point being made about the weakest link is always your chink in the armor, right? I'm referring to, elevating that, right? Some of the averages have to go up. I think there's a vast difference. Some are very good, probably the best in the world, but some are not, making the cut.
I think one way by which this can be surpassed is the way CIBIL or the bureaus came up on the credit side, on the credit risk side. I think cyber risk and cyber security, as it concerns the entire industry, I generally see a lot of collaboration possible. This is one area where there are no competitive interests. I think the ecosystem as a whole needs to grow up. So our ability to bring technology, data, ability to respond in a common forum, I think is the right time. If we do that, then the reassurance for the customers, for the regulators will all go a big way. And like Nitin was suggesting, I think innovation and security go hand in hand. You cannot think of one without the other. If you want to eliminate cash or at least reduce it dramatically, then you need to, on one hand, try to make it simpler, but on the same time, security is a brake which we need to constantly apply. So this has to work in tandem. So collaboration and ability to balance both is what is needed in the
right. So staying on the regulatory part of it, we talked about cyber security policy. Let's come to payments bank as a space. Do you think that there is a need for, and I think you've talked about it also a little bit, need for the regulator to understand that these payments banks or the niche banks that are going to come up has to be treated differently from that of a conventional bank kind of a space? Is the mindset?
Yeah. I mean, that's just very logical, right? Because if you created a model with the initial, so what was the genesis of the payments bank? The genesis of the payments bank was the idea that banks are not able to scale at the level at which this economy requires for small value transactions and small savings because of certain inherent business model and cost effectiveness reasons. Now, so who was fulfilling that requirement in the rural ecosystem or the uncovered, the excluded ecosystem? Were informal players like chit funds or Sahara. So just bear in mind that this is not just about transactions, it's about two problems. The problem of cash transactions and the problem of small savings, and both are related because the more cash there is in the system, the less the savings build up, right? So you were trying to solve a specific problem, and therefore the model that came up was a model that was inherently divorced from the risk structure that a normal bank has. So the idea in a normal bank, risk comes from the fact that balance sheets are allowed to be leveraged for the purpose of earning interest. So depositors' money goes through a certain cycle, and therefore the entire risk management is built around that. So for some time, if you move beyond the transaction. So for payments banks, a lot of that has already been taken out. So 100,000, limit on deposit, and therefore from an insurance perspective, the amount is insured. On the asset side, there is no lending happening. The money is into government liquid security, so there is no mismatch on asset liabilities, no fear of your money being lost. So having created that infrastructure where basic risks have been taken out, there is no doubt that it requires to be treated differently because otherwise there is no point. Otherwise you have a cost structure of a commercial bank and you are expected to, and no revenue, not the revenue structure of a commercial bank. And if commercial banks could not replace chit funds, then how do you expect these new people to replace chit funds? There's no magic here. As Mr. Puri and everybody said in the previous panel, it's not like my banking colleagues can't here do digital banking or innovation. But there's a reason why they do what they do and why payments banks will do what payments banks will do. So there has to be a difference in the treatment as well.
Okay. On the financial technology part of it also, the regulatory architecture, in the sense that, for example, take P2P lending. There is a sense that the regulator is being too cautious, and which is kind of unsettling the thing. The mindset needs to be different. Do you see a issue there?
No, I think from a perspective of the caution, they are on the right side of the caution, given that...
no, I'm talking about extra caution.
Yeah. So I think given the fact that the customers need to sort of get rid of the ignorance that's there with regards to P2P payments and how they can be vulnerable to risks, etc. from that, it's the right way to sort of move. As we go on, I think with the modern methods like UPI has come in and made it much more easier that it need not be the bank app, you can choose the app that you are comfortable with and things such as that. It will tend to sort of ease itself out. I think the inconvenience is more to do with the change than to do with what it brings forth itself. For anyone having a PIN and then remembering another one for another channel and then the third one is obviously going to be inconvenient. But the fact that there needs to be one, you can't rule that out. Also, I think technology brings forth far more easier ways of circumventing these aspects, which is, for example, bringing in gesture-based access and biometric and things such as that. And with that advent, and as legal provisions come across for those technologies to be adopted, it will get far more easier. We've seen this where the whole aspect of digital signature and saying how can digital signature be used for example, submitting your government forms, that's made life more easier. You don't have the triplicates and duplicates of forms being signed up. But when it first came in, there had to be data in that particular format. Companies found it very difficult to put in. I think with time, things ease up themselves, and that's probably the way it will go with P2P payments as well.
I wanted to add something on your point of the regulator. So there tends to be an emphasis on the role of regulator. So the regulator is primarily responsible for market development, order, surveillance, action. But the market also needs to evolve over a period of time other mechanisms that are good cross-check mechanisms. So one of the issues that we were discussing is if there are 5 people that are involved in a 5 participants involved in a transaction on the supply side, then what relationship do the 5 people have to penalize each other or to, what's the supply side dynamics? Then what is the insurance dynamics? If the customer is agnostic to the loss, for example, because the customer gets their money, it's a chargeback. And so you make a mistake, I give you a chargeback. Customer is agnostic. If the customer is agnostic, then the supply side needs to become much more responsive because I know that I have to bleed on that end, so I better address this problem better. Otherwise, there is a blame game going on and everyone is forever saying, it was so-and-so's fault. And then regulators are expected to come in and arbitrate between the supply side parties and between the consumer and the supply side. So that probably never takes us anywhere.
Right. But to ask you about the regulator part of it, just one last question.
Sure.
There is a sense that, it is too rule-based. It does hamper innovation in an area where you don't know how, at the speed at which things are moving.
Yeah, I mean,
you can be less diplomatic then.
No, I'm going to be controversial. I suppose I get hammered by the regulators on this. But the point is this, right? And you made a great point about taking the example of P2P lending in particular. I mean, I think the rule of caveat emptor applies here, right? The buyer beware rule. In India, in the offline unorganized market, especially in the small and medium enterprises, that is the rule. I mean, P2P is the order of the day. That's what people do today. That's probably the biggest market that you have. People, whether they're exchanging checks, whether they're, signed on behalf of somebody else, that is the way. The issue today is probably because it's come onto a digital platform, and that's the point that the panelists made, is that the regulator somehow has taken the role upon themselves to say that now I'm going to regulate it without waiting for seeing how this thing evolves. I would definitely err on the side of saying that let's see how these things evolve. I don't think people are stupid. I think people will be very careful when it comes to their money. The question could be that, is the market fooling them? Is there a possibility of there being large-scale frauds? I think in that particular segment, if you're saying this is somebody going online, willing to lend to somebody, looking at some of the parameters, etc. I'm just picking on this example to make a case in point. I think the risks should be allowed to play out a little bit. It's not as vast a problem as we can, and maybe we can come down and clamp down and saying, okay, these are maybe the areas where we need to do things a little more, orderly fashion. Because if you can view it as a marketplace and say, let things evolve, let's see where the innovation comes from, and then maybe regulatory oversight comes in. Because I think regulation is a response to needs. The people have needs. Regulation comes in. When we've seen it in insurance, we've seen it in banking, we've seen it in telecom. I think we have to let certain things happen before. Again, as I said, I'm maybe on the extreme side and being non-diplomatic about it, but that's probably the view that, if you want to foster innovation, if you look at technology, if you want to let things happen, some of this disruption has to happen. It's not just in P2P, but it's in payments. I mean, how do payments bank flourish if they're not allowed to innovate on the bleeding edge, right? I think some of these things we'll have to see how it plays out, but we certainly think some leeway has to be given in areas where it does not pose a systemic risk or a massive exposure to consumers who may be unaware of the consequences. That's kind of, my edgy view on this.
Right. Just to move to a different topic altogether, I remember last year when we had this technology roundtable, we were talking about mobile wallets only, how banks are trying to play catch up, and that was the idiom, mobile wallets. Now, a year later when I'm sitting here, you are hearing these bots, artificial intelligence, and all kinds of things coming up. Give us a sense about this dizzying pace of growth that is happening on technology front as far as banking is concerned. How are things playing out, and how well equipped our Indian financial system is?
Okay. So I think, can I just give a quick response to that last one, because it's still playing on my mind. I think there is a working group, that inter-regulatory working group, which has been constituted to just do exactly what you said, to find a response, if at all a response is needed, a regulatory response to fintech. Okay, so it's not that regulator is probably waiting and not enabling enough, and generally the view of the regulator is that there is enough already which is happening. Okay, I'm part of that committee, and that's why I can tell you that the all the work that's happening on the fintech side, including, we'll come to artificial intelligence and robotics also, they are also letting this happen. It's not that nobody's coming and saying that here's the regulation to do artificial intelligence, here's the regulation to do robotics, here's the regulation to do, innovation in payments, or this is what you can do and this is what you can't do. Yes, there are norms for two-factor, etc., but those are there, which are unique to our country. I still believe, and I strongly believe, that we do have enabling regulation, and regulation is also very, very, it's evolutionary. They will evolve and they're very open to that. That's at least our sense. Coming to this point on the bots and robotics, I think what's happened in the last couple of years is that a lot of the data has obviously got generated. And that's one of the good things or the bad things about digital, that you invariably end up generating a lot of information. And like a lot of people say that half the world's or double of the data that existed has been generated all over again in the last 1 year. Those kind of numbers float around. So if you have so much of information available and you really need to make sense of that information, and you want to make sense which is going to be meaningful enough for an improved interaction or an improved response or an improved marketing strategy, it is going to be impossible for human beings to do that without any assistance. And that is where artificial intelligence or assisted intelligence comes in to help people either take over some of those repetitive processes or add some new processes which will help us analyze that information which has got generated over the last couple of years or even before that, and we keep generating that on an ongoing basis. And as we do that, these themes will keep popping up, saying that here I've got a bot to make you feel happy. I've got a bot which will answer questions on security. I've got a bot which will help you service better. I've got a bot which will help you find the right offer. But maybe you'll have a master bot also trying to do everything, and an army of bots for the master bot. But the important thing is that there is so much information getting generated that to be able to make sense out of that, you do need assistance. And artificial intelligence therefore is coming in as a new area to take digital to the next level. That's really what my take would be.
See, my take on this story is, I think over the last 1 year, there has been this very unique confluence of three things. One, obviously mobility leading the bandwagon, which has resulted in the digital information / digital exhaust. Huge amounts of data. Half the time we don't know what to do with it. And this data is of multiple natures. It's not just about the person or whatever. What does he do? How does he behave? The social world. So earlier we used to be so kicked about credit data being available in a bureau. Today you can virtually build a profile of that person. So how you can do that? So that's another big story. And suddenly we have technology which has the ability to shift it, sort it out, put it in different buckets. And this combination of tech, data and mobility, and therefore consumer behavior, is throwing up a lot more opportunities in two fields in our way, if I were to sort of put a frame around it. On one side, it is helping us to, for the industry as such, to make operations efficient. Call center. Artificial intelligence is not something which is of sci-fi level. It is talking about the data which I already have, which today one individual is trying to answer a query. Can there be natural language processing which is able to pick it up? It's an equivalent of a very powerful Google sitting within our system, able to pick it up, and it is learning constantly on the basis of what are the top 10 queries. Person A asks for it, person B am I able to respond it. Will this result in my ability to use the human being for a much more intelligent, so this is the efficiency story. We see the same thing happening in operations. There are a lot of processes, whether it be regulatory, whether it be operational, which can be repeatedly being performed, convert that into robotics. Again, not very hi-fi, but is becoming a big trend. Direct bottom line impact, your ability to respond faster, cut cost, make it revenue impact is one. So these are the ones which are here to stay. Then comes the innovations like wallets. Wallets were playing a very unique role. It was playing that role between high ticket size and small ticket size in building it. You have Ola, there is UPI which has come in. Suddenly the face of the wallet is changing. Is it going to be a payment device, or is it going to be a storage device which will start building as a repository at its own level? So I think this will keep evolving. We don't know which of the bets is going to take off. So whether it's artificial intelligence, robotics, UPI, ability to interface, these things will change. I see two things which are very, very common. One is person-to-person payments. I'm not even coming to lending. P2P lending is a next big story. But just simple handing over money to each other. When will we replace cash with that? That could be the next big story. And the second is The other big chunk, I mean, Paytms and the world took off on mobile recharge. It's a very simple transaction. The more simpler are we able to bring it, a lot of micro events can come into the digital side. I think we have won a victory. The life events like buying a house, planning my will, etc. will always remain the world of physical banking where I need a, but when I can bring those micro events into the mobility world of the digital world, I think that's where the innovations will go. That will be more practical. The regulator will be happy and things will be much more progressive.
Yeah. From technology part of it?
Yeah, I think to the point about data, one of the things that we are noticing, right, and it's a convergence of what we are calling as banking and living. Banks, to the point that Madhi made, is that enormous amount of data is generated, but you call a bank, you would probably typically go through at least 5 or 6 layers of IVR before you get to speak to somebody. You call Pizza Hut, they'll call you by name, right? So what do you want to do today? This is what you have done in the last 5 times. I think that's probably where one can look at effectiveness, right? Saying bank knows so much about you. I would love it if I called the IVR of my bank and they say, we recognize you by name, we still need to authenticate you because while you're calling from your registered phone, go through the process, but cut the process and make it more efficient. I think that's where we see ourselves as playing a role, saying how can we help banks drive effectiveness, not just in terms of saying making a transaction more efficient operationally, but how do you increase the stickiness? Because so much of competition coming around, why should the bank with you and why not with somebody else, or why not with a new player who's going to start operations in 3 months' time? I think there's a big convergence here of what I would call banking and living, saying life events will dictate how people make choices, primarily financial choices, and if a bank who knows so much about me in terms of they know when I get my salary credit, what do I do, whose bills do I pay, if they can bring that convergence into that, how old I am, when am I going to plan for retirement, when am I going to likely to do certain acts and events in life. I personally think that data by itself can only be effective if we can bring some of this convergence, make it more effective, make it more sticky, help banks do things I honestly not seeing them doing today, even with me, with the amount of data that my bank has. That's where I see the role of technology in helping banks.
But some of the banks are buying up financial technology startups and doing things their way.
I think precisely to address some of that, because I think today we have come into a regime where there is a fair degree of specialization, right? I don't want to overstate the fact, technology is technology, banking is banking, right? But I think because of the expertise that is built up over a period of time, whether it is cyber security or whether it is fintech, there's quite a bit of experience and knowledge gained in the process of going through that motion, and that's why banks need to acquire that. How do you do that? Inorganic is one path, build it in-house is one path, but the process is slow. Nobody gives you 18 months to do stuff. They want to see it in 90 days. So acquiring fintech is possibly one way. Bringing it to the specialists like us another way, right? So that's probably what we see.
Does that explain the rationale? Some of you have.
No, so I think innovation, whether it's happening in fintech, whether it's happening in an incumbent technology partner company, or it's happening within the business in the bank, or in operations of the bank, or whichever part, or it's customer driven, whichever way you look at it, the good parts of the innovation cycle have to be brought in if they are meaningful enough. Okay, so that's very clear. How you want to bring that in is probably dependent on how each and every bank looks at it. So some people are saying we'll partner, some people are saying we will incubate and we will invest, some people are saying we'll buy you over, some people are just saying that we'll do it ourselves, right? But there is no right or wrong in this, and there is no predefined path to say that everybody should incubate, everybody should have an innovation lab, everybody should invest, everybody should acquire a few startups or fintechs. I don't think it's prescriptive from that point of view. But the important thing is that can you bring that innovation in if it is meaningful enough for your customer. Now that obviously needs two things. One is the technology architecture of the bank itself needs to support that, right? More than just the statement of intent to say that, yeah, I like that and I want to bring it in. Does the technology architecture support that? If it does, then yeah, you have the agility to do that very quickly. The other thing is that structurally within the organization, are you able to come up with those innovations yourself, partner with somebody very quickly who can do it for you, or even if it's a ready-made, ready-to-consume innovation, can you do that very quickly through your own organization structure enabling that? Most of the times it can fail because you will have typically a startup trying to go and knock doors of 10 different people in the same bank, trying to make sense as to who's the right person that I can first go and show this to. And even if they find the right person, they may not find the right person who's going to take the decision. That might be just the user segment in the bank. So these are the things which I think will depend from bank to bank. Our view is very simple and clear that we enable it structurally, we enable it technologically. We are not going to the extent of incubating or investing, but we do want to partner. We will set up the ecosystem. We have one already. We will keep evolving that. And wherever we see something which is meaningful and relevant for our customers, we will just go ahead and partner with that. And in any case, there is a test and fail methodology to all this. It's not that you go out and partner with 50 fintechs and then allow your customers to have 50 different options. But if 10 out of those work and 40 of them fail, that's also all right.
See, in our mind, the role of technology in the early days, 99, 2000, earlier, was to go after what are the core areas which you need to automate. That's how technological leap and progress used to happen. Very well-defined users, providers were very clear, very well established, you're bringing those practices here. In today's world, the procurement process has suddenly changed. It's no more the well-established players who are bringing in the newness. In fact, they have become legacy. Ability to innovate on top of those legacy systems is becoming a challenge. I always thought that US, why is that you're not able to do? But suddenly when you see now, even to touch something, and then you have regulations, you have patches, you have cyber and whatnot, and you have a huge base of customers who are already there. So the impact is always very high. So fintech suddenly is coming as a very nice whiff of fresh air. They bring in two things which are very rare to a huge bank. One is the bank always has a mindset of protecting first, innovation later. Fintech comes with, no matter what, let me innovate first and let's see what happens. I think when they come in, the talent which is behind the innovation and technology is also unique. That is the time I think we need to take a call, whether we want to partner with them, we want to just absorb them and bring that culture and not become a victim of the bank's policies, but retain their independence and do that. Or seriously talk to another partner who has a very different mindset and just find a way of engaging ourselves. So fintech is both a technology procurement, skills procurement. The kids who are going after that or the people who are getting into that bring in a very unique mindset, which I think trying to generate it within a bank is always difficult. Not that it is impossible, but it's difficult. So how do you play that is how we would. So for us, incubation, etc. are means, whether you want to support them or not. If you're focused on 3 or 4 areas that you want to go after, that's what you will pitch for.
Right.
Number 2, it also acts as a fantastic mirror to our existing teams. When you see these fintechs, you are able to find the gap between how we are thinking and how they are thinking. And that's a big game changer. And then innovation happens within. That's the play that we would like to go on when it comes to fintechs.
Right, right. On this technology that you are talking about, artificial intelligence, removal of some of the repetitive kind of work, etc. Some of the top banks in the country have already done it. What does it all mean for jobs? Not necessarily removal of jobs in terms of fresh job creation. Is that a live issue that is being discussed in the bank boardrooms?
Till now, it's not such a serious issue because what is happening is mundane processes are getting replicated, getting removed, and actually the job satisfaction of people who are getting impacted goes up because they are doing much more intelligent work. Does it mean that people have to reorient themselves for skills which are of one grade or 2 grades more? That needs to happen. Like in our case, we are almost moved in 300 to 400 processes and more will happen, and we are not even touched some of the other areas. What seems to be happening is we continue to grow. So as long as the overall tailwinds are very positive, I think that will support. But yes, it does bring in a challenge of what is the kind of IT skills, what is the kind of operational skills that we would start wanting going forward. Same logic in IT. Will we continue to be taking people from the programmers and the coders, or would we start building them inside who understand now? Because technology from an enabler or which was sitting in the back end has now come to the front. Technology is business. And Paytm is a damn good example where business is centered around the tech. I think to that extent, while the routine activities are getting eliminated, there is a much bigger challenge happening. So I'm not sensing that as an immediate problem. Maybe 5-6 years later, we need to be facing this temple and see how we can manage.
Right. You wanted to come in.
So I just wanted to say, I think it's a choice and both models work. It's just about the fact of the convenience of how a bank feels that they can get there faster. The whole point is about agility, because if you look at Either you call it a digital disruption, I would say it's an opportunity for everyone. Digital has truly come in as a level playing field for both large banks and across to small banks. We deal with small banks, and the fact that they are able to bring in UPI and IMPS, etc., is help them not just grow their business, but also retain their clients. But a very important point that you mentioned was that about the employee satisfaction. More than losing jobs, I would feel that the bank that has gone digital has probably retained more employees, primarily because the employee also would feel less at risk. If, for example, cash got automated, counting machines were coming in for, let's say, replacing the lick and count sort of model, it's always helpful. From a perspective of whether a bank buys a fintech firm or outsources to partners, I think it is horses for courses. It has to be measured equally. Not all banks are going to buy fintech companies and startups. Not every startup is going to get to be a Google or someone. So there is a limitation to each one. A bank can't outsource its entire technology because it has to have its inherent USPs with regards to differentiators. I would think that this will sort of even out, and it will remain not a trend necessarily, but it will actually be individualized to individual banks' taste of how they look at it.
Right. Now, coming to payments banks specifically, there is a sense that several of these payments banks which are supposed to come up has been delayed for whatever reasons. I mean, in general, I'm talking about. What do you think are the issues are? Is it regulatory? Is it?
Okay, so if it was so easy to combine the ability to do millions of small value transactions profitably at low cost and low risk, then I'm sure it would have been done by now, because the opportunity has always existed. It's not something new. So obviously we are trying to deal with a problem that's of a different nature, different magnitude, it's new. On the other hand, we also have, and I agree with Nitin that the regulators are being very proactive. They have been very engaged. They want to understand what will work and what will not work. But having said that, the broad regulatory framework remains broadly, banking. So bringing the two things together will not be easy for every player. Okay? You have to also count for the fact that these are not businesses that are making a choice of banking as their primary bread and butter business, with barring a few. So like for us, it's definitely a business that takes us a step further because we are already into payments, and payments is our core business, and commerce, and so banking is a virtuous cycle that happens. But wherever you have a issue of business focus, and then you begin to, which is why you saw people surrendering licenses, right? Because then you begin to compare and you begin to say, this is my line of revenue, this is my other line of revenue, and why do I want this to be a loss leader? If this is a loss leader, for how long? What is the long-term benefit? Do I get the same benefit by going and partnering with somebody else? All of those questions. In my view, people that are left in the field are probably people that want to do this, and therefore now it's more a matter of getting everything right. Because one of the things, and I think we also would fall sometimes in that category, is that you don't want to, we have a platform. So we already have a very live and kicking platform. But now we are talking about people putting their savings with us. Before you want to do that, you want everything stitched up, you want all the regulatory actions completed, you want all the technology in place, risk management in place. So, and there is never a prize to be first. I mean, this is an opportunity that's not going anywhere. This is a really massive problem. If you start after 2 months, it's not going to really, So I wouldn't worry so much about the delay. I would just sort of make sure that when they are on the ground, then they have the ability to do what they want to do. That's more important.
But the more or less consensus in the market is that yours will be the first one to.
we definitely would like to be the first ones to go to consumers. If you think about it, I think Airtel got a final approval. We have applied for, there's somebody else that has applied for. We definitely would like to, be as soon as possible. It's not in relation to other people, but because for our clients, we would like to be able to offer something better as soon as possible.
So by Christmas, just a crystal ball, by Christmas time, how many
like,
payments banks can we expect to be operational fully?
We would like to do it for sure. For sure. We wanted to do it before Diwali, and, small things remain So definitely Christmas. It's a good thing we have so many festivals in this country. You can always have the next benchmark, which looks good. Yeah, for sure we would like to be there. Maybe another couple of them should be there. March in any case is the final timeline. So.
Okay. Another point of view is that most banks in India, they have a digital strategy if you talk to them. But somebody told me the other day that they believe in a strategy of, he compared it with a digital lipstick. You just you bring out one product which is a marginal improvement over some existing product and claim that it's a very big innovation that you have done. Some of the top banks have gone over that phase perhaps, but there is a huge number of banks who are still doing this. How serious this problem is for the financial sector as a whole?
I just speak from a technology perspective and listening to a lot of banks wanting to make digital transformation, because that whole story of digitization, digital India, digital transformation has gotten everybody thinking, right? And what has happened, unfortunate, but it is the reality, is that a lot of the time today what you see on your mobile phones in terms of when somebody says mobile banking or mobile payments, it will change. But at the moment, it's about digitizing what somebody already does. So you do something in a branch or you do something on the internet, you do it. There's nothing wrong with it, absolutely nothing wrong with that. We've been using mobile banking for about 4 or 5 years. We've become comfortable with it. But the question that we tend to ask, and more from a disruptive perspective internally as technology providers, is that can you relook at the problem? Can you do things very differently when you look at mobility solutions? I perhaps think that path of discovery has not yet been done. So to the question that somebody referred to you saying, oh, it's a digital transformation, but we are trying to, the digital lipstick analogy that you use, saying let's just make something digital. Question could be that could you get that lipstick applied in a very different way and not use a lipstick at all, right? I'm sort of winging it here, but the reality is when you use something like a mobile device, can you look at the consumer experience very differently? There is information you have about the location of the consumer, there's information about the consumer that's unique. Of course, there's data privacy and a whole bunch of other things that come into play, but let's assuming you're over that hill, because of the amount of convergence of information and data you have, and you have such a powerful tool like the mobile in the consumer's hand, can you relook at the consumer's engagement with the bank? Maybe there are opportunities. I certainly think from a technology perspective, a lot of evolution has taken place to be able to support that. Question is, will we make that bite and take that leap of faith? Some banks that are app-only banks, we have a couple. We have one in India. We have a couple that exist outside. They don't even have a website. It's only an app, right? They're trying to innovate. Could one stretch that envelope? I absolutely think there is that opportunity. Hopefully the banks will lead the charge, because as technology providers we will provide a lot of enabling ecosystem, but somebody has to create that pull for making that attempt.
I feel if you look at the digital landscape that's happened, digital is the word given today, but it started off, I would say, decades back in different forms. Whether it was total branch automation and then core banking and then evolution of that aspect, right until now the power of mobile bringing across the accessibility for clients. If we look at digital per se, and you rightly spoke about it, about saying wallets was the thing last year and what happened, what's this year. We've looked at a gradual transformation of how people perceive and look at technology. 5 years back, the priority was virtualization, cloud, and mobility. And mobility was seen to be at the last step of maturity. Now you look at it, mobility is actually the starting point. And so you go about saying it's SMAC, it's social media, mobility, analytics, and cloud. And then you get a swipe around. So when you look at the new digital era, you suddenly find mobility is the starting point, and now you have artificial intelligence, machine learning, etc. If we analyze all of this, I think it's more to do with how much of digital footprint the customer leaves behind for the bank to analyze. And how much does the bank feel the need to analyze this and then give better services? Will banks that don't go digital, will they go down? It's a choice of their own. I think it's necessary that they go digital, given that the growing products happen to be more digital. There is a demand for digital. But at the same point, there are banks that also that are adopting it in a phased manner. Banks like to watch and then see what happens and then adopt that. Another question is also the affordability. I think as and when things get more mass scaled, the affordability point comes in. Today you would find, let's say, firewalls being much more affordable by a small bank to be putting in for their data center. Going in for a cloud model is far more affordable than, let's say, hosting your own data center and things like that. You will obviously see the changes there, even when you look at smaller banks would start adopting not just mobile but also bots, where the backend data can now afford for that access to be given out because it's all correct. At the end point, I think it is to do with how the bank first internalizes its processes, then improves those processes, and then looks at exposing those processes across to the customer. I think what the technology can help do is to, one, extend the standardization of processes. For example, what do bots do? If there is a standard operating procedure for a bank which is set, there is no need for a manual intervention in that standard operating procedure. So for example, if I said whether I want to look at, and I think Chanda mentioned this in her discussion, that would you lend to someone because they've got a better house, or would you lend to them because of the quality of their earnings? It's a point that the banks need to look at their risk assessment. But what technology can help do is to assess both areas of saying, one, the value of the property, and then the credit scoring of the individual. Bring that together and see if you can get a better product out. Better product could be either a quicker loan or a better interest rate or a much larger loan, and then various variants of it. So I think technology will continue to render that, and you will obviously see more evolutions.
Right. If I had to argue, and this is not my view, several private equity players who invest in tech startups say this, that the charge that some of the Indian banks face, that very incremental innovation, adoption of technology, several financial technology players are also to be blamed for this. I mean, there is this, they have remained as a niche technical solutions provider, and they are not looking at it holistically. The time has come for them to change. So they want to invest, they are unable to do it. I mean, this is a common charge that you see, keep on hearing. So maybe let's hear from some of the.
No, I think the fact that you have a ecosystem of fintechs, and banks are directly talking to fintechs, and these fintechs could be associated with an incumbent technology partner. They could be associated with a large technology partner, or they could just be associated with a hub, right, or some kind of a forum. The fact that it's happening is certainly because the same kind of innovation did not happen through the incumbent technology partners. All right, because technology has led financial services, like the earlier panel was also talking about. But the newness in technology, or the innovation in technology, is technology led. That is not always business led. You will rarely find a banker going to a technologist saying that, can you make technology like this for me? But you can possibly go to a fintech and ask them to do something like that, right? So it's always been the other way around, that new technologies have been brought in by people who specialize in technology and not by people who specialize in banking, right? So because that did not happen to the extent that what we are seeing happening right now, obviously that gap is being filled and has been filled in the past by the startups and the fintechs. So I quite agree with you that as much as it's a charge on the bank saying that it's a digital lipstick, maybe it's a digital chapstick for the technology companies,
Okay, that's a good way of, I think time is running out, good way of ending the first session. Now let's move to the audience. It's your chance to ask questions. Please identify yourself, and if you want to direct the question to anybody specific, please go ahead. Yeah, the gentleman there.
We were discussing about cyber security. Is there any insurance covered system for the losses due to hacking or anything else?
No, as of now, there is no model where there is an insurance coverage. I think the regulator is very clear that the banks are accountable for any kind of losses which would accrue due to any event or incident. I mean, the era is very similar to the early 2000, when phishing was one of the most common problem. I think we educated them, we made them aware. So I think today, whether we build an insurance, a cyber insurance today is an extremely costly proposition, because you cannot be able to put boundaries around it. There are no dimensions. But would something evolve as we understand this better? Maybe yes. But today it's not. It's the responsibility of the bank to bear this.
Okay, I am covered by the bank, But banks are not covered by any insurance cover. You
I understand, sir. That's a business model which, when you are getting into innovations like this, you have to be aware about that there is a cost of innovation, cost of doing things.
Gentleman there, yes.
Hi, the discussion was an intellectual treat. I had basically three questions. One is for ma'am, based on the challenges which you face on the ecosystem aspect, especially in terms of KYC, wherein you have already onboarded a lot of clients, but the KYCs are something. So will the system go through with a medium substandard KYC? Will the system have an approval? My question for Mr. Balakrishnan is that what do you see on the model of payment banks? As they have very little float, there is very little patient capital, how will they break even? One. And or will
don't
they
think I know the answer to that question.
That's okay. So, or will it eventually move towards government G2P or remittance plus model kind of business? And my last question is to Mr. Nitin.
Let these two questions be answered.
Okay. So on KYCs, let me tell you, if there is one thing that we aspire to do as a newly entering bank in the era of better technology, better information, it is to build a registry of people who are real and about whom we know more than it was possible for conventional banking system to know. And I'm not even calling it KYC as a regulatory obligation. It is actually an identity management system that will help me to do my business better. Okay. So now, is it easy? No. Is it possible? We will give it our best shot. Can we do it? We probably will do it better than, we would have done it 10 years ago when technology was not at our. So what makes us confident is there are a few building blocks in place. So UIDAI is one of those. The ability to do, a lot of API-based checks with various government authorities, etc., is another one. And, our own systems. So we will give it our best shot. Whether we will continue to have some problems? Yes, because there are some inherent problems. So just like there are inherent advantages to entering the market today, there are inherent challenges also. The inherent challenges now we are doing almost 70% of our new KYCs using using biometric KYCs, and we are doing it. So we've already done 1.9 million KYCs. And one of the learnings which is disappointing is that when you get data back from UIDAI, sometimes it's not complete. So date of births are the same, PIN codes. So I mean, of course it's a humongous advantage to have 1 billion people on a database, but the database, I wish it was more exhaustive. The other disadvantage we have entering into the market today is that the concerns around, regulatory concerns around people are much higher. So everybody is a stakeholder. Home Ministry is a stakeholder, Tax Department is a stakeholder, FATCA is something. So there are like multiple things that need to be combined. So is it easy? No. Is it something we will do our best to do? Yes. The second question, you know the answer, so you have to tell me.
No, I think it pertains to us. Yes,
no, you've been asked. You have to.
No, please.
No, so how will payments banks make money because they don't have float? I don't know about. I hope that there are enough differentiations that people will find their own, mojo. As far as we are concerned, we think of ourselves as building a large platform on which we will be able to, it's a secure platform where a lot of people are able to do a lot of small value transactions. That data obviously can create a lot of value for the supply side, which will include commerce, which will include governments, which will include other banking and financial services companies. Everybody who's been wanting to access this market, because this market is a large market but has not. So in the previous panel, I think we heard many times the rural and semi-urban market. But that market has not been easy to do business with so many people, and we hope that we will be able to create that. So, is there money to be made? If there is value being created, there will be money to be made. So that's not such a worry.
I completely agree with, because what the payment banks are going to play a role is bring about this long tail of our customers who are not yet into proper banking into the mainstream. And what Chinjini is talking about, the ability to get into identity is sort of established. And then the next barrier is the capability part of the story. And if we are able to bring in a lot of these micro transactions into the digital world, where we are able to track it, analyze it and build, which a bank today will never be able to do because it's limited to a certain section. This collaboration between banks new payment banks, various other fintechs, is what will evolve new business models. Our ability to lend, productively, not necessarily losing money, because earlier it's a trial and error. So this is where I think the payment bank model and existing bank models needs to evolve. Partnership is going to be the name of the game as we go along.
Yeah.
Hello. Good afternoon, panelists. A very intriguing discussion indeed. The context of my question is through the previous panel discussion, in which all of the panelists were very confident about technology increasing the menu on the breakfast table of the banks. So my question is about new product offerings which technology will enable banks to provide. So if I were to borrow Mr. Puri's analogy, chicken curry being served, what will chicken tikka or chicken tandoori look like?
So I don't know why nobody said it in the previous panel, but if the question was if bankers will have their breakfast taken away, they will still have their lunch actually. So why is anyone worried? Who's answering that?
Yeah. Any of you?
I don't know, one of the things that I can certainly think about, I'm speaking as a non-banker, but looking at the space very differently. We've heard the conversation about the long tail, and I think the subtext there is the undiscovered opportunity, the huge opportunity that I see today, and we'll see how it pans out, but extending the distribution capability of existing banks and thinking unconventionally about it. We have over 120,000 branches in India, maybe Postal Bank will add another 120,000, whatever, points of presence, but I don't think that's enough. The point is, can we serve the customer, or can banks serve the customer anywhere, anytime, anyhow? That mechanism, I think, is behind some of these things. And will that lead to new product offerings? I most certainly think. But I think everybody will evolve in their own way. Telcos may do it in a different way. The Paytm would do it in a very different way. And there are other, players in the market who would I think, identify opportunities. Very difficult to crystal ball gaze on what that would be. But what we hear in terms of, from being asked the question to what Nitin said, we're seeing a lot of that, saying, give me a technology that can do this. I think, and what's behind that is being able to create those products and services. Will it drive bottom line? Will it create, increased revenues for this bank? Jury is out there. But I think, that attempt to make that happen is a big shift. And I certainly think there'll be more options. There'll be not just chicken tikka masala, but other options available on the breakfast.
And there are a lot of vegetarians. Like, you can never underestimate, overstate the diversity of this country. And what will it take to build a system where everyone participates? First of all, it's 1 billion people. It's like 35 different languages. It's just about so much diversity. So will everybody find their own way to do business better because there will be a new set of people that will add more data and more capability to the system? The big answer has to be yes.
So let me try to put it in two perspectives. Banks today, digitization technology is helping banks to make their products much more efficient. So if I'm doing a personal loan or a card or a lending or a liability or a transfer, technology digitization is helping to make it much more seamless, better experience, better TAT, etc. This is where we are getting challenged by the new fintechs who will take away our breakfast equivalent. They are not coming on an end-to-end basis. There are certain areas where they are nibbling away because they are much more nimble and they do not have legacy problems and they are able to, and thereby new business models are evolving. So while the banks will try to defend this territory because of the scale, good customer proposition, owning the trust, etc., the challenge actually is equivalent of the vegetarian dish being brought to the table, is our ability to reimagine the products. Today, for 80% of my existing customer segment, I wouldn't be able to lend, and that's where these spreads lie. So how would we imagine underwriting of credit? How do I evaluate credit risk? Is there a social factor involved into it? So our ability to do that and not retain it as an activity, but actually build it into a scalable business model is what needs to happen over the next 18 months. So this is going to be a good challenge which will actually keep us on our toes and try to re-evolve our businesses. But does it mean that one is going to replace the other? I don't think so. Like Sanjini said, India is of multiple markets. So there will be very unique markets which is taking care of. There will be different business models taking care of different business perspectives.
Right. Yeah, please.
Sorry, this is Harshit Jain. I had a question for Mr. Balakrishnan. You mentioned about mundane activities being taken up by artificial intelligence systems and thereby increasing the employee satisfaction as well. Now going forward, as these activities actually go up the knowledge chain, do you see some resistance from people sharing their intelligence, their experience with these artificial intelligence systems, knowing fully well that once their knowledge and experience is captured in the system, then they could be made redundant?
No, actually it's the other way around. Millennials of today who want to come and work for banks do not want to do those low-end activities. They are exploring. So it's not from a customer experience perspective itself, the aspiration that people want to do. So our hope is that the skills that we need to get will continuously. So this bit of conflict of what is a human being transferring to a robot, etc. is, I think it's more fiction. Today they are very keen. The productivity dramatically improves. Earlier there used to be a time, I mean movies were made saying that in private banks people will spend late nights. Touch wood, today 5:15, 6 o'clock they are home. Because processes are ticked. So productivity is coming up in a big way. The challenge is about whether, like today we employ 70,000 odd people. How will that emerge in the going forward? Till the time growth is there, it's not an issue. Once we get into like the European banks, and we'll have to rethink of what the other models could be.
Yeah, as long as you have underserved markets, what technology is helping you do is to shift your attention to new problems. And as long as that cycle is ongoing, and I do agree that at some stage you need to worry about it, which is a lesson from where Europe is. But the thing is, it is the inevitable. That can't take you back to the Stone Age anyway.
Hello. Hi, good morning. My name is Mayur. Good afternoon, in fact. Mayur Kapoor from Sibyl. Shinjini, question for you. So there was talk about how payment banks will make money, and the way payment banks were structured, they are not allowed to extend credit directly, of course. But I think one of the things they can do is enable dispersal of credit by acting as a business correspondent, if I'm not mistaken. So do you see a scenario where that portion of the business kind of becomes very big, given the need for credit, kind of latent need for credit especially in rural India, and payment banks become a big enabler of credit indirectly? Do you see that happening?
So don't forget that there are also 10 new small finance banks that are uniquely engaged in solving that problem. Having said that, appetite for credit is almost insatiable in rural, which was the lesson from the microfinance industry. Will we play a major role in getting that in that distribution, we and others like us? The answer is yes.
Good afternoon. My name is Gopinath Nambiar from Euronet Services. I have two questions on cyber security. One is on the earlier panel also discussed the type of controls and the mechanisms that we have in terms of securing the payment switches, the network, and at the cardholder end. My question is on the cardholder end. I observed that the amount of money or amount of this to be has not been invested by the banks, in the sense that there are so many solutions available today where as a card user I can have a lot of control on my card. For example, right now I am not using my card. I can literally put my card to sleep, or I can put geographical controls on my card. I can put controls on my card in terms of my usage on the on an e-commerce site, etc., etc. But today there are hardly any bank who's giving this sort of control to the end user. My second question is on the in country like Europe.
Let them answer on this question, and then they'll whether any.
This was more a comment, if I understand it correctly.
If Euronet offers this, I think you should take it to the bank. I mean, if these kind of solutions are available, I'm sure the banks would be very happy to use things. And we are aware of some of these solutions where you can actually do some, customization.
I think if you have a specific question, you can ask.
Yeah.
My second question is on in countries in Europe, for example, they have something called Cyber Defense Alliance, where Cyber Defense Alliance among the banks, where they share any sort of breaches that happens, and where they share this information which helps everybody. I don't know anything of that sort is available in India, or is there any move by the banks to have this sort of alliance?
That's a complete no-brainer. I think its time is very much there. I think we as banks should come together and we need to make that happen. There's one area where we believe collaboration will give us a greater force multiplier than trying to fight this battle alone.
Thank you.
Let's have the final question, please, if anybody is there. No, I think they are all quite. Okay, that brings to an end this discussion. Thank you very much indeed.
Thank you.
And